Hello everyone, welcome back to another edition of Special Situations Investing with Greg. This week I will be talking about my experience participating in the Enel Americas tender offer. Check it out. Hey everyone, welcome back to another edition of my YouTube channel on Special Situations Investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. Welcome back. This video will be a pretty quick one because I'm just doing a quick post-mortem of the Enel Americas, and I'm not really seeing any new tenders out there right now, so hopefully there will be something next week that we can talk about. But as it sits, Enel Americas is the tender offer that I participated in last month. I'll put a link to my original thoughts on that in the video, and you can take a look at it yourself and kind of see where things were. So I participated in the Enel Americas tender offer for about 10% of their shares that occurred last month. And this last week, the cash got deposited back into my account. I did a couple of calculations to kind of see what kind of returns happened in this, and we'll go ahead and divulge that right now. So I tendered all of the ADSs that I had purchased as part of my anticipation to participate in Enel Americas tender offer for approximately 10% of their shares. And the total amount of shares tendered was a significant amount. They ended up only purchasing back about 37.7% of the tendered shares. So it was, I think that it was for approximately 7 million shares, and 15 million shares were tendered in this deal. The repurchase price for those tendered shares, the 37.7% that were tendered, came back to be $9.93 per ADS. My entry price was $8.39 per ADS, which basically puts the total return for tendered shares at 18% over that couple of weeks, and not a bad gig. However, I have 62% of my original invested shares still in my account now that the tender offer is completed. This means that I've got a bunch of shares of a company that I wasn't expecting to have long term, and in reality, you know, it's not necessarily, I'm not too fond of having foreign companies. Again, if you didn't know, this is a foreign company, and participating in these foreign exchanges is not necessarily my biggest desire. I feel like if I can't make money in the United States stock market, why should I be looking outside of this? But this was one of my experiments, and I wanted to just kind of see how it panned out. And you know, so far, so good, you know, pretty decent return on the tendered shares that were there. However, the current price of the company is closer to about $7.57-58 per share last time I looked, which means that in reality, I haven't really gained a lot out of this tender offer. And in fact, I did a cost analysis, a cost basis of my original shares that are outstanding that I still have in my account, and included the returns that I received from participating in the tender offer. My current cost basis per share on my Enel or NEIA Americas tender offer company is about $7.51 per ADS. And so really it's turned out to be kind of a wash for what I've got right now. That being said, I spent a little bit of time looking at the company and doing some more due diligence over the past couple of weeks, and it looks like I'm pretty confident that the third-party advisors and appraisers that had done an appraisal of the company post the merger with EGP. EGP is the green properties portion of the business that they are currently in their merger actions going on with it. And I went ahead and looked at that, and I think that they're pretty good with their analysis, and that the company is worth somewhere between $10 and $11 dollars per ADS, and that would represent essentially a 33 to 46% upside for the company. I'm going to go ahead and hold on to my shares for the next little while unless I see a better opportunity present itself over the next few months. Otherwise, we'll just kind of sit on it for a little bit. If they pay a dividend, I'll collect the dividend. If they don't, I'll go ahead and just kind of observe how this turns out, and I'm looking forward to seeing how it plays out. I'm pretty confident that there's not too significant of a risk, but again, this is not a company out of the United States, and there are additional risks and taxes and all sorts of things that are involved with that. But we'll see how it pans out, and I'm looking forward to seeing what it plays out to be over the next 6 to 12 months. Hey guys, I do post-mortems of every tender offer that I participate in, and if you want to continue to receive information on how I participate in these tender offers, please go ahead and hit that subscribe button. If you like these videos where I go over my past experience, go ahead and hit that like button to let me know, and we'll check you next week. Thanks a bunch, guys.